Good morning, this is Steve O'Hare from Signal Centre, and today is Wednesday, the 30th of June, 2021. And today we're going to run through the commodities. We're going to take a look at crude oil, also natural gas, and I may even take a look at precious metals as well. So crude oil sentiment remains steady. There were concerns surrounding the risk that coronavirus developments would hamper global demand. And markets are also expecting OPEC will announce higher output quotas at Thursday's meeting, but expected underlying restraint would continue. WTI crude oil pushed towards session highs, getting up to 73.50. The API data recorded an inventory draw of 8.2 million barrels, and we've got oil inventories later on today. So let's dive into it. On the weekly chart, we'll start from there, drill down to shorter term time frames. We still feel like we're in the fifth and final wave of this impulsive move higher from the $10 low on this chart from April last year. Resistance comes in at 76.80. We managed to get up to 74.11 yesterday, yeah, that was yesterday. But the weekly candle is forming a bit of a negative candle, hanging man candle at the moment, so have to be a little bit wary of that. Drilling down into the daily chart, it looks a little bit messy, but we're within this resistance range between 72.84 and 73.64, and this seems to be capping price action at the moment. Also, the MACD has crossed over, so that's a negative indication, and we are seeing bearish divergence, so that again negative. This rally higher has been quite extreme and quite formidable, so there has to be some sort of short-term reversal correction in the coming days or weeks, but it just seems to push higher and higher, so not really evident yet. On the 4-hour chart, we've got so the 74.02 high was taken out with a 74.11, so we're forming a bit of a double top formation. A close below 72.09 would confirm this, and for me that would lead to a slightly deeper correction in price action. That would also mean we'd break the 4-hour Ichimoku cloud. On the Brent crude side of things, similar sorts of formations on the long-term charts. We managed to get up to a high of 75.66, and we're seeing a 73.20. We reacted from yesterday, and that's topped out at overnight at 74.88, and we've seen price action struggle since then. We're really competing with this Ichimoku cloud support, and we can see this congestion previously also coming in at this previous support level 73.80. So really a break of 73.20 should open up a move to 71.46, and really need to recapture the highs pretty quickly if this move is going to continue into the end of the week. On the nat gas side of things, we were looking at the daily chart, and this really has played out really nicely. We have hit a high at 380. The real triangle formation, which we noted a break of, we had a swing back to retest, and since then we produced 7 positive days of price action, and that still looks good today. $3.70 we're trading, $3.80, still more upside, but again looks a little bit extended, overbought conditions at the moment, but plenty of room on the upside. No reason for that not to continue. A quick look at gold. This is forming some interesting, it's at an interesting level. 1755 for me is quite a serious support level. We managed to get down below it yesterday, but didn't manage to hold below it. We're forming a bearish flag. I think a break of this 1750 now would open up a move towards 1676. So I hope you've enjoyed that technical analysis rundown. Look forward to seeing you next week.